Now, I've been wanting to talk about this for a little time now because I've really been keeping up with the stock market and how gold is moving and how the US dollar is actually moving. And gold is at an all-time high right now. And this video is here just telling us a little bit of why it's like that and if it's a good time to invest in gold. Let's tune into the video and see what's going on out here in these streets.
Entrepreneur Gerald Wong has been investing in gold for over 15 years. He's been buying regularly, but not selling.
I started investing in gold ETF shortly after I started working. I would always allocate a small single-digit percentage of my portfolio towards gold. So as my portfolio grew with time, as my savings accumulated when I started working, I would also add to this position.
A gold bar now costs over $1 million US. Gold prices rose 20% this year, crossing the $2,600 US mark per ounce in September 2024. Gerald, the founder of a financial wellness startup, believes investors should have a diversified portfolio with a gold component.
What we have seen historically for the returns of gold is that it has generated a return of 8% per year. This is higher than what we see for US bonds as well as US cash. What we have seen for gold is also that the historical returns are slightly lower than what we see for US stocks, which has generated a return of 11%. But in the past, gold has a lower volatility compared to US stocks.
Gold prices have risen as geopolitical and economic uncertainty pushed up safe haven demand. There's been robust central bank buying as well.
We've got escalation in terms of geopolitical tensions in the Middle East. We have the ongoing Russian war with Ukraine. This had previously drove up gold prices by a fair bit. And with potentially what happens is gold is a good store of value. So with that in mind, when there are tensions and uncertainty, investors tend to turn to gold because it has a store of value. And if you were to look at what's coming up this year, we have the US elections in November. I think there's a lot of uncertainty at the moment.
Well, that makes sense, honestly. I've been hearing this for a long time. If you can buy gold, because gold is a commodity and what's the word I'm trying to look for? Gold is a certain precious metal that you cannot really. It will always have a price. It'll always have value. Gold is something that it's always going to be around. People are always going to want gold. It's kind of like a universal currency. The universal currency, because it's something you can mine. It's from the earth, but at the same time, you can own a lot of it. You can own a lot of it. People used to pay with gold, so I understand why this would be something that would be something safe to invest into. Because gold is always going to be around. Gold. It's mineable. But it is also a lot more harder to get than working for $1 million or working your behind off just to accumulate some money.
The latest rally comes as the US Federal Reserve began its easing cycle with an outsized half percentage point cut. In a low-rate environment, gold makes a more attractive investment option compared to interest-bearing assets such as cash and fixed-income securities.
If you were to compare from the opportunity cost point of view, if you look at gold itself, if rates are going up, then investors will want to prefer some of the higher interest rate bearing assets. For instance, they could put in deposits, they could put in bonds, which could offer higher rates of returns. However, that will also mean that the opportunity cost will be high for gold, because that will make holding gold less attractive. But when rates comes off, then this is where holding gold will become a bit more appealing. Going into 2025, we're looking at closer to the 2,700 levels.
Some market watchers are more bullish. Citi Research believes gold could hit $3,000 per ounce by mid-2025. So, if you are new to investing in gold, where should you start?
One of the popular ways that investors have been looking at gold is really by buying up the physical asset. However, what we need to be mindful about would be the cost of storage, as well as potentially the cost of insurance. The other popular way that investors are gaining exposure to gold is really through a gold exchange traded fund, which are effectively products that are traded on a stock exchange.
Before picking a gold ETF to invest in, always look at the fees or expense ratio. High costs erode portfolio returns.
To me, that would be the best way to do it. Buying gold ETF, especially if you can't afford to go out and buy a physical ounce of gold. If you can get a piece of gold and keep adding over every other week or every 2 weeks or every week, keep adding $1 here, $10 here, blah, 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 however much you can afford. Over time, it'll grow. And gold is not going anywhere, honestly. And even if it seems to be like seems to be like a crash in the stock market or whatever the case may be, gold is not as volatile as the stock market. So it's not going to drop as quickly or as low as other stocks would drop, because there's value in gold outside of just the stock market. There's always going to be value in gold. So I could understand, and I would definitely invest in some gold ETFs.
For example, if you invest $5,000 in an ETF with an expense ratio of 0.04%, you'll pay $2 to the fund's manager every year. As with any investment, there are key risks to look out for when investing in gold. One drawback is that bullion does not provide regular income like bonds or stocks. You only make money if the price goes up.
If there is a very sharp economic slowdown like what we saw during the COVID-19 period, the price of gold can be negatively impacted as well. So that would definitely be one of the key risks relating to the gold price. The other thing is really that gold does not generate any income for investors. So if investors are looking at generating a dividend income yield from, then that would be something that needs to be taken into consideration.
And while gold does well in times of uncertainty, prices could fall if global tensions start to ease or if the Fed makes a U-turn on its easing policy.
Let's say the Fed decides, or the central banks decide not to cut rates and decides to start hiking rates again because inflation is going up and they need to arrest inflation. So that story about global easing comes to an abrupt end. This will be detrimental to gold prices, because the other factor to consider of is what if there is a sudden de-escalation in geopolitical tensions. For example, war in Russia-Ukraine ended, there is a ceasefire in Israel-Hamas, perhaps the US election turns out to be a very beautiful one, a peaceful one, then the de-escalation in geopolitical tensions would potentially bring about a pullback in gold prices.
You may also want to think twice before buying gold jewelry as an investment.
Well, spot gold itself, you would be able to capture wherever the spot market is pricing. Whereas for jewelry itself, you have to account for workmanship costs, which could be between 15 to 20%. So that itself would mean that you are not able to fully capture what you see on the spot markets in terms of pricing itself. So your exit price on jewelry could be at your disadvantage.
My advice to anyone who is looking to buy gold would be the same as anyone who is looking to buy any investment product. I think you need to know more about what you are buying into. Even if it is seen as a relatively safe asset such as gold, you need to do your homework to understand what is this about, why do you believe in putting your money into it, and what are the long-term returns that you then expect to generate from it.
Now, I believe what he's saying. I personally would look into gold ETFs at this point. Not any specific gold firm or anything like that, any specific gold stock, but a gold ETF is definitely something I am going to consider actually buying. So yeah, I'd really like to know y'all thoughts about this down in the comments below. I know this is a little different, more about business and investments, which I'd like the people and my people to also be into, as I'm heavy into that also. So I had to bring this to the people, man. Make sure you guys take out your time and actually, sorry, let me say that over. Make sure you guys take notes and take some time to actually study about this, and invest your money into places that'll actually benefit you in the future. And like I said, I'm not a guru or anything, but I fully do understand why he would say and why people are saying gold is a good place to store your money, especially if you're trying to see a gain of a certain percentage, every year over year of your money just growing. I personally, like I said, would invest into an ETF over buying the physical asset of gold, but that's just me. Let me know y'all thoughts, man. I'd really like to know y'all thoughts in the comments below. Hit that like button, hit that subscribe button if y'all are new, and until next time, peace.